So today we've got a couple of stocks to talk about. We've got Sofi that is doing absolutely amazing at the moment. Starbucks just brought out a trading update or an earnings report that's a little bit earlier than expected, and it was horrible, and we'll take a look at that one and something else as well. So hope you enjoyed the video. Hit the like button, let's get started. Now really quickly, just to shout out, I'm not a big fan of the platform, but Weeble are currently doing a promotion. I'll put the link in the comment section, but at the moment they are doing an offer over the next kind of 2 weeks, which can earn you up to $9,000 in free fractional shares, which is not too bad. I'll put the link in the description if you do want to take advantage and just get some free shares, some free money out there. There's two tiers. Tier 1 is an initial deposit of £100 and you'll receive 5 free fractional shares, and if you keep that balance of £100 for 90 days, you'll get an extra 5 free shares. Or you can go for tier 2, which is a little bit more expensive, but if you do deposit £2,000 and leave it in there for a 90-day period, then you'll also get 15 free fractional shares the first time around, and after 90 days, you'll get another 15 free fractional shares. So if you want to go for tier 1 or tier 2, you can go get yourself some free shares and some free money. So take advantage of that if you want. I thought I'd just share that out there for you guys if you do want to go make some money. Anyway, first of all, Sofi, number 1 on this list. Sofi is having a brilliant time at the moment. In the last 6 months, the stock is up 38%. And for me, that's been buying in that kind of $6-7 range. I've been on YouTube plenty of times over the last year or so, saying if this stock ever gets into the below $7 range, really, I think the stock is a good opportunity to buy. And since then, the stock has done absolutely amazing. I'm personally up around about 50% on my Sofi position now, which is obviously really, really good. I still think there's potential for Sofi to have a really good finish to the year if it does a good Q4 earnings. But yeah, obviously I will take being up 50% this year on Sofi. It'd be really good for it to come a 100% return member. That's the target, because I tell you something, when I did Sofi videos, I never really realized how hated Sofi was. It was a really hated stock. There was a lot of shorts on it. And when I was covering Sofi, like the amount of comments that I got on Sofi stock, like calling it a trash stock, some of them are going to make some really good posters if it ever does get to 100% return, which hopefully it does it sometime soon. But yeah, I will take 50% for the year anyway. Sofi just continues to rally at the moment. We had the news out not too long ago about the 2 billion pats they have with Fortress Investments. That was really one of the big kick-on drivers for the stock to do very well. But I think everyone's just been looking at the positive news that keeps coming out with Sofi. I mean, for so long as well, during this period of time, you know, they had earnings that kept coming out that were absolutely amazing, and the stock just kind of kept giving it all back, which was the frustrating thing. And now all of a sudden, everyone's kind of realized, actually, you know what, we probably should take this stock a little bit higher. And with the positive momentum, the positive news, we've seen all the analysts now come out and they've all started, you know, raising up the price targets in the last kind of couple of days. So for example, Citigroup raised it from $11 to $12.50, and there's a lot of other analysts that are jumping on board. It's amazing, isn't it? You know, you've had such a long period of time where the stock's been stagnant and they just shoot to life so often. I say this all the time, this is why you can't time the market, guys, because you can sit on a stock for 6 months, 9 months, 12 months, and you get a bit fed up. You're like, oh, when's this stock ever going to go up? And within a split second, you know, within a month period, you talk about a stock that goes up 50%, and that's why you just got to be patient sometimes. You just don't know when it's going to rally, but it does. And the evidence has been there for a while. We just didn't know when the big money was going to come in and lift it up. But we've obviously got Q4 to still go with Sofi, and hopefully they do a good quarter. We are expecting 19% revenue growth, which would be really nice. And from an EPS point of view, we're actually expecting positive EPS from a loss of 0.29 last year. That will mean 4 quarters of profitability for Sofi, which would be really good, because that would also put it in for an inclusion into the S&P 400 mid caps, or potentially start pushing towards an S&P 500 inclusion. If any of those things happen, they could be big catalysts. We've seen it with the likes of Hims and Hers when they got added into the S&P 600 small caps. We saw the likes of Palantir when they got added into the S&P 500. When all these institutions then have to go buy the stock, when they've proven they can do 4 quarters of profitability, sometimes these stocks can go on really big rallies, and I think Sofi can continue the rally that it's been on. And realistically, you know, this company is still 40 times forward earnings, which isn't terrible for a company that is currently doing the numbers that they are doing. You know, the profitability is rising up very nicely. You know, they're going to come off a year with 18% growth. It's a premium company and it's going to have a premium valuation. What was the big key driver is that you look at it now at 40 forward times earnings and you're still like, that's not too bad. The thing is that when we were at $7, $6, and people were saying, oh, it's a trash stock, that was the time period when the stock was actually like towards 25, 28 forward times earnings, and it was like, this is what was so crazy, is that people sleeping on this stock at 25, 28 forward times earnings for this business. And obviously some of you guys have hopefully made good money on it, and some of you guys are probably sitting there going, oh, maybe I should have bought that one. For me personally, I will just continue to hold, because I do think the stock will end up going higher in the next 5 years. There'll be times where I probably release a little bit of capital on it now, because it was a bit of a large position for me, and obviously I've made some really good money really quickly. So I'll probably, over the next kind of 12 months, slowly release some money from that investment, but I'm really happy how it's performed. Which leads us to another one that isn't performing that well, which is Starbucks, which surprisingly, the stock is actually up 2% year to date, which I don't know how. I don't know how Starbucks is up 2% year to date, because this stock should be down year to date. This stock probably should be down 20 to 30% year to date. And during a good period of time, it was actually down that sort of range. It was only in the last kind of month where the stock has shot up 30%. And obviously that came off this CEO change. And obviously the market really liked it. But adding 30% onto a company's market value because of a new CEO, I think that's a bit too much. And that's why I was started buying during this dip. I think Starbucks at 70 is probably not too bad value, and that's where I started buying, and the stock shot up and I took my profit and I ran from it. So that's why I had to sell, because I can't believe the stock is up 2% year to date after the earnings have been posted. And as well as that, you're paying 26 times earnings for this business, and the profit's going to drop. So the P next year is actually going to be even higher than where it is right now. So I think paying this sort of valuation for Starbucks is insane. It's absolutely crazy. And what they did yesterday is they brought out preliminary Q4 earnings. And normally if a company brings out preliminary earnings, it's because the earnings are going to either be really good or they're going to be really bad. And they were really bad. I mean, we knew they were going to be bad because obviously that the booted the CEO out, and that was the sign that they were going to be really bad. And also, as well as that, the new CEO that they've got in place wants to just throw the kitchen sink there and just say, like, it's really bad out here. So he has easy comps to do. He gets all the bad news out at once, suspends the guidance, the full year guidance for next year. He just gets it all out, and he could say, look, it was all the fault of the old CEO, and then he sets the bar so low that he can obviously go on and beat it. But I think the big thing is that I actually didn't realize how bad some of these numbers were going to be. Like the recent numbers they just brought out in Q4 were terrible. Global comparable store sales were down 7%. Non-GAAP EPS was 0.80. This was versus the consensus of $1.03, and from a year ago it was $1.06. This is massive amounts of miss. You're talking over a 20% EPS miss on the stock. So you have a company that's declining sales and a big drop on the EPS, and that's obviously once again going to make the stock look a little bit more expensive. And with these numbers, with these big misses and declining sales, the stock is up still year to date 2%. That just does not make sense at all. That's why I had to take the money off the table. I don't know who is holding this stock at 26 times earnings, this premium valuation, going, yeah, this is really good value. I just don't understand how this is doing it. And to be fair, the stock even dropped after hours, like down over 5%. And during the day, the stock has pretty much recovered all of the dip on Starbucks. It's just, I don't know. It's absolutely crazy. There's a few things in the market where you look at the moment, you're like, it's a little bit frothy. And seeing Starbucks hold up and, in fact, be at 52-week highs after an earnings report where they've just had sales go down 7% and the EPS just missed by over 20%, and they've had to cut the full year guidance. I mean, fair enough. We know that this is a quarter where you're just throwing all the bad news out there, but I don't think it should be up 2%. The fact that people are buying this stock and holding it and thinking this is good value, I think it's absolutely crazy. So, yeah, it is what it is. And that leads on to the last stock, which is McDonald's. McDonald's is having a bit of a tough day, down nearly 5%. And they had some news that came out that said that they have had an E. coli outbreak in some of their stores. So they said they've got 49 cases, 10 people have been hospitalised from it, and I think actually one person's died from this as well. So the big issue is that they've had to recall, I think they found the actual ingredient that's causing it, and I think they've recalled it, and obviously they're not using it anymore. So I think they've kind of got it sorted. The big issue is that there's probably going to be some big compensation claims. And the other thing as well is, like, there's so many stores that have had to take the burgers off the menu for like the next kind of couple of days, which isn't good, because imagine pulling up to McDonald's and you're like, can we help you? And it's like, yeah, just let you know, you can have anything off the menu as long as it's not a burger. Like, well, that's about half the menu gone. It's like the same when we had the chicken shortage in the UK a few years ago. When, do you remember you used to go to KFC and they didn't have any chicken in? It's like, well, what are you going to have? Like chips and corn on the cob? Like, it's just not going to work. So it's probably going to affect the sales, but at the end of the day, you know, it's going to be just probably 1/4 of damage, and then it'll be fine. So I would say that this isn't as big of an impact as Starbucks' last quarter, because they can probably resolve this issue very quickly, and you probably won't see any more impact after the next quarter. Starbucks has real problems on its hand. Like, the fact that they're still declining sales this much and the profits dropping this much and missing by that much shows to me there's big issues with Starbucks. I mean, a few people are saying boycotting issues. I think personally that there's just so much more competition out there now from a coffee shop wise. You know, people have other alternatives, cheaper alternatives, if they want more of a luxury alternative. I think they've got a lot of competition, and I think the other thing is pricing as well. Like, Starbucks have shoved their prices up massively. I think me and my girlfriend, we went to a Starbucks near us about 2 weeks ago, and I think we had 2 coffees, and it was over like £10 for 2 coffees, and it's like, you know, this is crazy money. You know, when you start paying £2 for 2 coffees over £10. So, you know, no wonder people are kind of pulling back or going for other cheaper alternatives. So I think that's a big issue. But saying that, McDonald's has its issue as well. You know, the revenue is flat at the moment. They're missing on an EPS point of view. 26 forward times earnings. I mean, it just adds to all the things where at the moment, the US stocks for me are just looking very, very richly valued. And this is an example. And the fact that we're at a point again where bad news means your stock still goes up. Well, I guess in McDonald's case, that's not the case, but I would argue the case at Starbucks. I think the news that came out from these guys yesterday was awful, and the fact the stock is basically break even on the day after those numbers is shocking. And yeah, it just reminds me a bit of like 2021 when we just had like bad news and the stocks still go up. It's a little bit worrying, and I just don't see any opportunities out there right now in like the US market. In fact, when I do the stocks I'm buying series towards like the end of the month, I actually don't think there's going to be that many stocks on that list. It's got me thinking now actually how many are going to be on there. I think I'm only probably going to be on like 1 or 2, which will probably be the shortest one that we ever have. So yeah, that's where we're at anyway. So yeah, I thought I'd just cover those 3 stocks. Sofi, which is having a great time. Starbucks, which is having a horrible time, but yet the stock is somehow about break even on the day, and McDonald's, which is having a big issue at the moment, but I think they'll probably be able to resolve it. So yeah, I still won't be buying though on that sort of valuation anyway. Hope you enjoyed the video, guys. I'll see you in a bit.